In an unexpected turn of events, Canada appears to be running out of steam in its resistance against Trump's tariffs. After weeks of standing firm, signs of capitulation are emerging. Ontario's Dackford, in his latest interview, struck a notably conciliatory tone, stating, "Let's work together. Let's sit at the negotiating table as two of the greatest nations in the world." However, India and China are showing no signs of backing down, meeting the challenge head-on with retaliatory tariffs and implementing strict trade restrictions. Europe is also talking tough, but the crucial question remains. Will these words translate into actual action, or is this merely political theater? As one EU official declared, "As Europeans, we will always promote and defend our interests and our values, and we will always stand for Europe." Trump's new wave of tariffs represents a total trade war with virtually every country on Earth, so comprehensive that it hasn't even spared trade with Antarctica. The situation is becoming increasingly concerning, with many experts warning that we might be heading toward the worst recession in U.S. history, potentially surpassing the 2008 financial crisis. On April 2, 2025, Donald Trump made his dramatic announcement from the White House Rose Garden, declaring it Liberation Day. He unveiled an extensive plan to impose tariffs on all imported goods, sending shockwaves through global markets. Investors, businesses, and world leaders scrambled to formulate responses. For countries that treat us unfairly, we will calculate the aggregate rate of all their tariffs, non-tariff barriers, and other forms of unfair play, Trump stated. He announced that all goods entering the United States would now face a 10% tariff baseline. But that's just the beginning. Countries he accused of parasitizing America would face much harsher measures. China, for instance, would be subject to a staggering 34% tariff rate. The global economic landscape is transforming rapidly, with some experts comparing this moment to historical turning points in international trade relations. The ripple effects are already visible in stock markets worldwide, with major indices showing significant volatility. Here's your 1875-character news story. In a bold move that's shaking global markets, President Trump has unveiled sweeping new tariffs, claiming it's not a trade war but restoring fairness. The numbers are staggering. European countries face 20%, Japan 24%, Vietnam 46%, and Cambodia a whopping 49%. Even Kazakhstan hasn't escaped, being hit with 27% tariffs. Displaying his characteristic directness with a chart in hand, Trump declared to journalists, "Other countries have been robbing us with their tariffs while we give everything away for free. That ends now. We're finally standing up for American workers. If you don't want to pay tariffs, build your factories right here in the United States." The impact was immediate and dramatic. Within hours, the euro surged 2.5% against the dollar, the biggest daily jump since 2015. Market analysts suggest this might signal a global pivot toward Europe in search of more equitable trade deals. Stock markets plummeted as investor panic set in, with companies heavily dependent on imports taking the hardest hits. Major retailers and manufacturers, particularly in footwear and apparel, are reeling. Nike, for instance, faces severe challenges with its heavy reliance on Vietnamese and Cambodian manufacturing. The 46% and 49% tariffs represent a devastating blow, sending their stock prices plunging between 15% and 30%. Retailers are warning of sharp price increases across various consumer goods, from shoes to clothing and even toys, affecting consumers not just in America but worldwide. The global economy seemed to shudder following Trump's announcement. His own approval rating hasn't escaped unscathed, dropping to 43%, his lowest since returning to the presidency. The international response has been swift and severe, with the European Union condemning the move as reckless and promising rapid countermeasures to protect their interests and markets. As the dust settles, analysts warn this could mark the beginning of a new era in global trade relations, with potential long-term consequences for international commerce and diplomatic relations. The EU's preparation for retaliatory measures suggests we might be entering a period of escalating trade tensions. Here's a 1875-character news piece based on the provided content. In a dramatic shift of global trade dynamics, major world economies are mobilizing their responses to recent U.S. tariff policies. The European Union has conducted emergency meetings to strategize their countermeasures, specifically focusing on potential tariffs against American goods should negotiations fail. Beijing has taken a particularly aggressive stance, denouncing Trump's decision as economic bullying. Chinese officials aren't just stopping at verbal protests. They're preparing a two-pronged response, filing a formal complaint with the World Trade Organization, while simultaneously drafting their own retaliatory tariffs on American exports. Japan has also voiced strong opposition, warning that these actions could severely damage long-standing alliance relationships. But perhaps the most surprising development comes from north of the U.S. border. Canada, previously maintaining a tough stance against U.S. trade policies, has shown signs of softening its position. Ontario Premier Duckford's recent statements mark a significant pivot, expressing gratitude for tariff exemptions and signaling openness to dialogue with the White House to resolve trade disputes. This represents a notable departure from Canada's initial hardline approach, which included retaliatory tariffs on U.S. goods worth $30 billion. The shift appears driven by economic realities. With over 70% of Canadian exports heading to the U.S., the pressure has become too significant to ignore. Economic experts warn of potentially devastating consequences, including up to 1 million job losses, particularly in Ontario and Quebec provinces. The automotive industry, serving as Ontario's economic backbone, faces particular vulnerability to the proposed 25% tariffs. This sector's health is crucial for Canada's overall economic stability, explaining the government's more conciliatory approach. The situation highlights how economic interdependence can force even the most steadfast positions to evolve when faced with practical economic pressures. In a significant shift from previous positions, Canadian officials are now signaling openness to dialogue regarding trade tensions with the United States. Finance Minister Duckford has announced that Canada is willing to consider reducing tariffs on American imports, provided President Trump reciprocates by lifting trade barriers. The only acceptable tariff is zero tariff, Duckford emphasized, marking a departure from Canada's earlier aggressive stance, which included prohibiting American alcohol sales in certain provinces. This softening approach reflects growing economic pressures facing both nations. Meanwhile, economic experts are warning about the U.S. economy. The probability of a recession by 2025 has jumped to 50%, a dramatic increase from previous forecasts. This isn't mere speculation, it's based on economic indicators that continue to deteriorate. One concerning aspect is the delayed recognition of recessions. Economists typically need over 7 months to officially confirm a recession's onset, a lag that could prove dangerous for businesses and consumers. During this period, companies may be cutting jobs, and consumers might be reducing spending, creating a downward economic spiral. The National Bureau of Economic Research evaluates multiple factors beyond GDP when declaring a recession, including unemployment trends, consumer spending, and industrial production. Major financial institutions like Goldman Sachs and J.P. Morgan have issued warnings about economic deceleration, noting declining consumer expenditure and business hesitancy. The convergence of these factors, trade tensions, potential recession, and delayed economic indicators, creates a complex challenge for North American economies. As businesses and consumers brace for economic headwinds, the shift in Canadian trade policy suggests growing recognition that cooperation might be necessary to navigate these uncertain times. The coming months will be crucial in determining whether these diplomatic overtures can help avert severe economic consequences. Economic storm clouds are gathering as Goldman Sachs raises its U.S. recession forecast to 35%, signaling growing concerns among top financial experts. This sobering adjustment suggests we're either already in or nearing an economic downturn. For American families, this forecast paints a troubling picture of job insecurity, rising prices, and challenging financial decisions ahead. Looking at historical patterns, the United States has weathered 13 recessions since 1945, with durations ranging from a few months to 18 months. Each downturn has brought hardships, job losses, wage cuts, and market declines. Understanding how recessions impact different sectors provides context. The stock market typically peaks about 8 months before a recession is officially declared. If we take February as the market peak, we might not see an official recession announcement until October. Historical data shows the S&P 500 typically drops around 30% during these periods. However, there's a silver lining. Stock market behavior doesn't always mirror the broader economy. While stocks often decline before an economic downturn begins, they also tend to recover more quickly than the general economy. Markets bounce back within the first year 85% of the time, and show consistent recovery within 3 years. The housing market tells a different story. Unlike stocks, housing prices have shown remarkable resilience during economic downturns. In the last 6 recessions, home prices actually increased in 4 instances. This suggests real estate might serve as a stable investment during turbulent times. These insights come as major banks continue issuing warnings about economic difficulties ahead. The key question remains: is there still time to prevent a full-blown crisis, or have we passed the point of no return? As financial experts analyze these indicators, American households need to prepare for potential challenges, while remembering that markets have historically shown remarkable resilience in recovery periods. In our financial analysis segment today, we're examining a pattern that could affect your retirement and investment decisions. Historical data shows stability in real estate markets during economic downturns, with one exception: the 2008 financial crisis, which saw a 20% housing price drop. With current aggressive tariff policies causing global market uncertainty, many Americans are wondering where to put their money. The answer might surprise you. During recessions, we typically see the Federal Reserve lowering interest rates, making mortgages more affordable. This creates opportunities for investors. Our financial experts emphasize, maintaining steady income and continuing to invest during market downturns is crucial. Think of market fluctuations like ocean waves. They're natural and inevitable. The successful investor doesn't fight the waves but learns to ride them. Long-term investors who maintain positions during downturns often see substantial gains during recovery periods. Our analysis shows that success isn't about timing the market perfectly. It's about staying in consistently. Those who continue earning and investing during challenging periods typically end up stronger financially. This becomes relevant as we watch trade tensions between major economies. While critics oppose current tariff policies, warning about potential global trade wars, others, especially American manufacturers, see opportunities in these market shifts. The key takeaway: focus on objective financial information and be prepared for both risks and opportunities during economic uncertainties. By studying past downturns and monitoring current events, investors can better prepare for challenges and protect their assets. Remember, while market volatility can be unsettling, history shows that patient, informed investors typically weather economic storms successfully. Stay tuned for our next segment about recession-proofing your investment portfolio. In a significant shift for American manufacturing, the automotive industry has shown remarkable optimism towards recent trade measures, particularly those affecting production sectors. Industry leaders view new tariffs as an opportunity to level the playing field in global competition. Auto workers see these measures as a chance to boost domestic production and protect American jobs. The increased prices on imported vehicles are making American-made cars more attractive to consumers, which should strengthen the industry and preserve domestic employment. The response from the automotive sector has been positive, especially among union workers in the Midwest, where jobs have been threatened by imports. With tariffs, there's hope that manufacturers will relocate production facilities back to the United States, creating new employment opportunities. While unions celebrate job protection measures, economists suggest these tariffs could stimulate investment in American infrastructure and manufacturing. The potential for growth in automotive and steel manufacturing has generated optimism, even amid economic concerns. However, if other countries implement retaliatory tariffs on American goods, the U.S. could face export challenges. President Trump remains steadfast, asserting that tariffs will generate revenue for the Treasury, which can be directed toward reducing national debt and lowering taxes. He maintains these measures will protect American interests and restore manufacturing prominence. Industry analysts warn that losing access to key markets could result in revenue decline and layoffs. Despite apprehension from economic sectors, the administration defends its position, arguing that short-term adjustments will benefit American workers and industries. The automotive sector's response reflects a debate about protective trade measures. While some sectors see immediate benefits, others worry about effects on the supply chain and international trade relationships. The situation evolves as manufacturers adapt to new market conditions and trade dynamics shift. Breaking news: global economic tremors as trade wars escalate. In a significant development reshaping the global economic landscape, recent policy shifts have sparked intense debate across international borders. While promises of job repatriation echo in Washington, market reactions paint a concerning picture. The Republican Party is divided, with some praising tariffs as a bold step supporting American workers. Critics from both sides warn of potential catastrophic consequences. As tensions escalate, the world economy shows signs of instability. Economic experts compare current situations to historical trade conflicts, noting how protective measures have backfired. The effects are visible in key sectors, from agriculture to manufacturing, with small businesses particularly vulnerable. Major economies like China and the EU are preparing responses, while Canada seeks diplomatic solutions despite earlier positions. This web of international reactions suggests uncharted economic territory. The situation resembles past economic confrontations, particularly trade tensions affecting disputed territories. These historical parallels offer lessons about the consequences of economic isolation. Wall Street analysts worry about the timing, as indicators point toward a possible recession. Trade barriers combined with existing economic pressures could accelerate downward trends. The global community watches closely, understanding that current decisions could have historic implications. Markets from Tokyo to London remain volatile, responding to each development with sensitivity. As we monitor these developments, stay informed about how these changes might affect your financial future. The coming months could prove crucial in determining whether these measures lead to prosperity or isolation. Share your thoughts on how these economic shifts might affect your local community. Subscribe to stay updated on these critical developments as we navigate uncertain economic times. Until next time, this is your trusted source for global economic news.